Well, for more on this, I'm now joined by Gerald Celente, the founder of the Trends Research in New York. Mr. Celente, thank you so much for being with us. And now, will these measures give the Federal Reserve the ability to prevent a new economic crisis in the future, do you think?
Well, no, they won't. We have to realize that the Federal Reserve is actually behind the reasons why the crisis occurred in the first place. Tracking trends is an understanding of where we are, how we got here, and where we're going. In the how we got here, let's understand that the Federal Reserve had gone to Congress not more than a year and a half ago wanting more of this regulatory power, and it got off the radar screen when the economic crisis hit. Secondly, the Federal Reserve, if you go back to March of 2000 when the dot-com crash happened, rather than letting Wall Street take its losses and the speculators lick their $5 trillion worth of wounds, what the Federal Reserve did was they lowered interest rates to 46-year lows. And they created the speculative bubble that was the real estate bubble, the leveraged buyout bubble, and the merger and acquisition bubble. So what's happening is the Federal Reserve, and by the way, the Federal Reserve is no more federal than Federal Express. It's a private company. What they're doing is these are the people that caused the problem are now being asked to fix it. It's an illusion.
That is may be, but this plan that has been proposed by the Obama administration is to give the authority to the Federal Reserve, or the U.S. Central Bank, if you like, the authority to monitor major financial institutions. So do you think that there's now a danger that these changes might politicize the Reserve?
Well, it's already politicized. Again, the Federal Reserve, and look who's the Treasury Secretary of the United States. It's Timothy Geithner. Timothy Geithner was the former president of the New York Federal Reserve Bank. So it is already politicized. Washington is Wall Street and Wall Street is Washington. It's an illusion that there's any difference. And again, the Federal Reserve, by lowering interest rates, created the problem. And now they're creating the bailout bubble, which is even bigger than the dot-com bubble, the real estate bubble. So no, this is not going to do much of anything. It's just a confidence-building measure, and confidence isn't really going to change the game. It's like putting a set of brakes on a car that has already crashed, and these aren't very good brakes at all.
Well, Mr. Celente, in light of what you've been saying, then, how strong do you think that this new proposed regulatory reform will actually be? Some experts are saying it's already been severely watered down thanks to the U.S. banking lobbyists.
It has been watered down, and when it goes through Congress, it'll get watered down again. Again, these are the kind of things they do after an accident, after a crisis. They say, we're going to get tough and we're going to fix it. Let's be realistic and let's be adults about this. The same people that are in the White House, Larry Summers, President Obama's chief economic advisor, as I mentioned, Geithner, before him, Robert Rubin, the former Treasury Secretary under the Clinton administration. These are the people that destroyed the regulations that were in place that would have prevented this. They're the ones that dismantled the Glass-Steagall Act, the Banking Act that was put in place during the Great Depression so that banks could not become these speculative organizations. Under the Robert Rubin, and which Timothy Geithner was part of, and Larry Summers as well, they deregulated the equity markets to allow these toxic instruments to be floated across the world. So to think that this has any kind of power or lasting power is fiction.
Well, Mr. Celente, nonetheless, these men have won the right to sit in Congress, and I gather from what you're saying you do expect the bill to be even more diluted once it goes through Congress. What kind of changes do you expect to see to the bill as it goes through that process?
The equities market speculators will get more of what they want, less regulation. It's really not going to make any difference because the greatest depression is underway. They know that this is not going to be solved by printing more money. phantom money out of thin air, backed by nothing, and producing practically nothing. These are the kind of measures that are taken to calm the markets, to make it appear as though they're in control and they're going to fix the problem and it's not going to happen again.
Well, on a more optimistic note, the thinking behind this is, of course, to guard against future domestic and international financial crisis. And, of course, whatever happens in the U.S. does affect the rest of the world. So do you think that these changes are a good thing for the globe's financial markets, or will it make no difference at all?
It won't make any difference. It's not a question about being optimistic or pessimistic. It's a question of what is. And the what is that the prime entity behind the crisis is the Federal Reserve System, by injecting tens of trillions of dollars of phantom money backed by nothing, created out of thin air. Again, they're the ones that created these bubbles. The real estate bubble, the dot-com bubble, and now the bailout bubble. So none of this is going to mean anything in solving the crisis, and in fact not preventing a further crisis, because now the Federal